It is Wednesday evening. You are at the supermarket, your cart is half full, and you are standing in front of the organic produce section. You have more money in your bank account than you've had in years. In fact, you are in a comfortable position, yet you pick up the regular tomatoes, the cheaper ones. Your hand moves automatically, as if it were muscle memory from a life you left behind. You pause. You look at the organic ones. They're $3 more expensive. You can afford them. You know you can afford them. But even the thought of spending extra money makes your chest tighten. Your subconscious tells you, I might need this money tomorrow. It is a luxury. If I start spending like this, it'll be bad. And in the end, you grab the regular tomatoes and move on. Even if you are making much more money than you used to, if you feel like you'll go bankrupt, if you make a mistake, this video will explain why that is and what it means about your relationship with money. I am Logan Wolfe, and I develop ideas about the psychology of money and why people's internal experiences with financial matters almost never match their external realities. If you've gotten raises, saved money, improved your life, and still feel like you are in survival mode, hit the subscribe button because we're going to tackle a topic that most financial advice completely ignores. Here is what no one tells you about making more money. The assumption is simple. More income means less stress. If you are stressed and you are making $5,000 and now you are making $9,000, the math says you should stop feeling broke because your stress should be almost halved. But that is not what happens. Your stress changes costumes. It doesn't disappear. It just shows up differently. In the 1970s, the average American household earned about $60,000 a year in today's money. Don't be surprised by $60,000. The purchasing power of money back then was significantly higher than it is today. That income supported a family, a house, a car, occasional vacations, and still left room for savings. The stress people felt about money was different. It wasn't about whether they could survive this month, but rather whether they could afford the nicer version of something they already planned to buy. Fast forward to today, the average household income is approximately $75,000 per year. Adjusted for inflation, this is 25% more than in the 1970s. You'd think we're all living 25% better. Mathematically, that is true. But in reality, it is different, because the volume of money has increased, but after nearly 50 years, the value of that money has decreased. Even though you have more money, you should feel less stressed. But instead, something strange has probably happened to you. The things that determine how secure you feel, housing, healthcare, education, transportation, income, have become exponentially more expensive while slowly increasing. In the 1970s, housing costs accounted for 25% of income. Today, in most cities, it is closer to 35 to 40%. Back then, healthcare was almost insignificant in the household budget because employer insurance coverage was standard and deductibles were minimal. Now, the average family spends over $12,000 annually on healthcare, including premiums, deductibles, and out-of-pocket expenses. This means that in 2026 terms, the volume of money has increased, but its value has decreased. To help you understand why you feel broke, let me continue with an example. In 1970, a college education cost about $10,000 a year in today's money. Now it costs between $35,000 and $60,000. This is where the psychological trap lies. You earn more money than your parents did at your age. You know this. You can see it on paper, but your lifestyle doesn't feel proportionally better because your basic expenses consume everything your extra income provides. You are not moving forward. You are running faster, but staying in place. And this is where the survival mindset kicks in. Your brain doesn't care that you are making $9,000 a month instead of $5,000. You still feel broke because, as I said earlier, the volume of money has increased, but its value has decreased. Your brain knows this and cares whether you feel secure or not. Security isn't determined by income. It is determined by margin. The difference between what you earn and what you need to live without panic. If you earned $5,000 a month and spent $4,000, you had a $1,000 margin. If you earn $9,000 in a month and spend $8,000, you still only have a $1,000 margin. Same safety cushion, same stress level. The only difference is that the apartment is nicer and the anxiety has a better view. This is where things get really weird. Once you start making more money, banks and investment companies treat you differently. Not necessarily better, just differently. You are no longer in the overdraft fee zone. You've been promoted to the investment product zone. And this shift is where the survival mindset strengthens in ways you may not even be aware of. When you were making $5,000 a month, banks mostly ignored you beyond charging fees, credit card over limit fees, monthly maintenance fees, ATM fees, that sort of thing. Withdrawing money under the guise of banking. After moving into the higher income bracket, the approach changes. Now they want you to invest. They want you to open brokerage accounts, retirement accounts, high-yield savings accounts with minimum balances. It seems like progress, doesn't it? Finally, you are being taken seriously as someone with financial potential. But from here on out, it is wise to be cautious. All these investment products are designed based on a single assumption, the assumption that you have margin. The assumption that you can lock up your money for 5, 10, 20 years without needing it. The assumption that you are acting without considering the possibility that everything could go wrong. But if you grew up poor, if you struggled to get by for years, or if you witnessed your parents lose everything in an economic crisis, your brain doesn't care how much you are earning right now. It is still prepared for disaster, because this is the Cold War mentality in our grandparents' and parents' time. There was the Cold War. People thought that armed conflict could break out at any moment, that there would be famine, that there would be an economic crisis, so they always acted cautiously. That Cold War mentality was passed down to us from our grandparents and parents. That is why most people probably open an investment account in this situation. They deposit their money. Let's say you did that. You put the money into the bank's investment account, and then the following scenario could play out. You lie awake at night thinking about what would happen if you needed that money and the market lost 20% of its value in an instant. This is a survival mentality. The issue is not the amount in the account. The issue is whether your nervous system believes you are truly safe. Let me tell you about something that happened to me. I doubled my income within a year. My freelance work increased, my clients started paying more, and I went from barely getting by to a situation where my money was increasing every month. I was very excited for about 2 weeks. Then my anxiety started intensifying like never before. I began checking my bank account several times a day, not because I was spending recklessly, because I couldn't believe the money would stay there. I kept thinking there was a mistake, that a client would ask for a refund, that the tax office would come knocking with a huge unpaid tax bill. I earned more money, but I felt even more insecure because my basic assumption was still that this wouldn't last. It took me a year to understand what was happening. I wasn't living in my current financial reality. I was living in my past financial trauma. Every decision I made, even though I had much more money, still went through the "what if I run out of money again" filter. This is the basic survival psychology of humans. It is hard to adapt and adjust when things change. And that is what makes it so insidious. A survival mindset doesn't just make you anxious. It can actively prevent you from making decisions that could provide long-term security. You don't make aggressive investments in case you need money. You won't take career risks in case the new job doesn't work out. You won't negotiate harder in case they withdraw the offer completely. You stay safe. This means you stay where you are. The same patterns that protected you when you had nothing have now become patterns that prevent you from building anything. Now let's talk about how this looks in practice. Because the survival mindset manifests itself in very specific and very distinct ways. You've probably experienced some of these without even realizing what they are. Let's consider this with a few possibilities and assumptions. First, even if investing makes more sense, you are more likely to save cash. You know that money sitting in a checking account loses 3% annually due to inflation. You know you should invest, but you can't. Cash gives you a sense of security. Investments feel risky even if the math says otherwise. Another is that you optimize for survival rather than growth. A person earning $5,000 a month and a person earning $9,000 a month, if their mental framework is not to lose, both may be in survival mode. The person earning $9,000 a month just has a more expensive version, a nicer apartment, a nicer car. The basic strategy is the same: avoid risk, protect what you have. Let's consider another possibility. Even if you have money, you feel guilty about spending it on unnecessary things. The supermarket tomato problem. You have money. You want that thing. But your brain probably works as if every dollar you spend is a dollar you'll urgently need later. Let's consider another scenario. You are still carrying bad financial habits from your broke days. You still buy the cheapest version of everything. You still avoid doctor's bills. You still change your own oil because paying someone else feels like weakness. These aren't frugal habits, they're trauma responses. And let's make one last assumption. You can't imagine a future where money isn't a constant source of stress. Even if you imagine financial success, your brain immediately jumps to yes, but what if? The economy could crash, you could get sick, you could lose your job, you could make a mistake and lose everything. You can't imagine stable abundance because you've never experienced it. Your bank account is in good shape. Your nervous system, however, tells you to stay alert. What makes this particularly cruel is this: a survival mindset is a terrible strategy for building wealth in the long term, but it is a perfect strategy for crisis management in the short term. When you are truly broke, hypervigilance keeps you alive. Chasing every dollar prevents disaster. Avoiding risk prevents mistakes you can't afford. But once you are no longer broke, those same strategies become a chain. Think about it. The human brain struggles to adapt to novelty and difference. You are trying to build wealth with a toolkit designed to prevent disaster. And these two goals require completely opposite approaches. Building wealth requires risk. It requires investing money you might need. It requires betting on yourself. It requires spending money on things that might not pay off. All things specifically designed to prevent you from doing so by your survival mindset. So what is the real solution? Because simply telling someone not to worry about money is useless advice. You can't override your nervous system's response with logic. Here is what really works. You can't fix survival mode by making more money. You've tried that. It didn't work. You can fix it by proving to your nervous system that you are safe. Proof is not logic. Logic says you have 6 months savings and you are fine. Proof says you've had 6 months worth of savings for 2 years and nothing catastrophic has happened. Your brain needs time and repetition to reset to feeling safe. This means practicing being less on edge. Deliberately make small financial decisions that feel risky but aren't dangerous. Buy organic tomatoes, go on vacation, invest part of your savings even if it feels scary. Remember, no one ever gives investment advice on this channel. Not carelessly, consistently, in small doses. Shift your focus outward. Your brain is trying to do all the work that is exhausting. Automate your savings. Set up automatic investments. Create systems that move money without overthinking. Allowing your brain to relax can be quite beneficial. And here's the part no one likes. You may need to address trauma. If you grew up in a poor environment, became homeless, or witnessed your family lose everything, these experiences linger in your body. No matter how great your current success is, it can't erase that. Therapy, somatic work, whatever it takes to process that past. If you want to feel rich rather than just look rich on paper, these aren't optional. The goal isn't to stop being careful with money. It is to stop being afraid of it. Remember, it is beneficial to stop fearing money and change. Life favors the bold, and courage is a powerful trait for change. Beyond the topic of courage, I should also explain this. There is a difference between thoughtful financial planning and constant financial panic. One is useful, the other is just painful. Once you understand that, let me tell you what it is. I started with small steps. I gave myself permission to spend $100 a month on anything I wanted without justification, just because I wanted that money. The first month, it felt too risky, so I spent barely $30 because I still felt a little broke. The second month, $60. Finally, I reached $100. I reached $100, and the world didn't end. Then I automated my investments. I took the money I would normally save in my checking account and set up automatic transfers to index funds. I couldn't stop myself. I couldn't think too much about it. It just happened. My brain hated it for 3 months. Then it got used to it. A year later, something changed. I started checking my bank account twice a week instead of 5 times a day. I could watch my money leave my account without my chest tightening. I started making decisions thinking, is this a good opportunity? Instead of what if this bankrupts me? I still have moments like that. I find myself choosing the cheaper option even when I don't need to, but it is not constant anymore. The survival mindset is still there. It just doesn't drive me anymore. You might be experiencing this too. You are not alone. The important thing is to be open to change, not to be afraid of it. If this video helped you understand why you still feel broke, hit the subscribe button. I analyze the psychological patterns that keep people financially stuck, even if your bank account says otherwise. Leave a comment and tell me which characteristics of this survival mindset you see in yourself. Do you save money? Do you prefer security over growth? Do you feel guilty about spending money? Let's compare notes. See you in the next video.